All right, everybody, welcome back to another episode of the Birmingham Real Estate Investor Podcast. I am your host, Spencer Sutton, and I'm glad to have with me back today. This is, Jonathan, this is your second time on the podcast. You're essentially a veteran. If you've been here twice, the last time we had you on, I went back and looked, we interviewed you in April of 2020. And you are our second guest to interview. We interviewed Brian Miles, then you, and then you are our third podcast. So welcome back to the show.
Thank you very much, Spencer. Appreciate it. Happy to be back.
Yeah. And a lot's happened it's almost been 2 years. So a lot's been going on. We've been in the middle of a pandemic and a lot has changed. So what I do want to say is if you're just catching this episode, I would encourage you to go back and listen to the episode. Is our third episode in this podcast series where we interviewed Jonathan. Matthew and I did, and Jonathan gave us a great rundown of his business. We talked a lot about turnkey real estate. We talked a lot about different areas of Birmingham that Jonathan loves. And so Jonathan, we know that you and your partner, Jeff Shadrick, are with REI Trader, but tell us kind of what's been going on in your business over the past couple of years since we last caught up.
Well, every day I wake up and it's almost like a horse race. It's trying to squeeze as many things in a 12-hour period as possible. Yep. One of the key things I always like to tell fellow investors and new investors is that, you're running a business. You trying to do this part-time is incredibly difficult, especially if you're out of state. Yep. So in the last time that we've chatted, a lot has changed, a lot has shifted. I think the market has shifted, and we can certainly talk about that. Yep. But for us, what we look for is diversification. We look for new avenues to generate revenue. And obviously, REI Trader is our primary investment company where we buy and flip properties. Recently, a couple of weeks ago, we sold 3 properties to OfferPad. We can certainly talk about that and my experience and how that went down. We have increased buying rental properties for our portfolio. We're exceeding 100 doors right now. Our plan is to get to 200 within the next 12 months. We are in the process of renovating a multifamily 24-door unit up in the Center Point area.
Yeah, I saw really well. Yeah, I saw something on that recently. I definitely want to dive into that as well.
Yeah, and we are continually trying to acquire properties. I think right now, just because the market is so strong, buying and selling turnkey properties to our investors has been a real challenge. I posted yesterday on my Facebook feed how I went to go look at a property off the MLS, and I thought, wow, what a great property. I'm going to make an offer. And I texted the agent to say, hey, I'm interested, got any offers. And she responded, I submitted 19 offers on the property. And yeah, it kind of tells you where we're at with the market. So, buying and holding properties at the higher price points where renovation costs and rents have remained stable, but with a higher entry point has been a challenge to get our returns. So we've started to diversify into other areas. We are chasing a few other new multifamily properties. We're chasing I think 187 unit property that is probably good at be in the neighborhood of $4 to $5 million on the renovation side, and we're hoping to get that under contract in the next few weeks.
So let me stop and ask you. And we've got a lot to unpack because I do want to hear, and you've got some more things that you guys are doing. So I definitely want to hear about that. So since we last spoke, it was already a pretty hot market when we were talking back in April of 2020, but the pandemic had just set in. Are you surprised at how strong the market remains, and why do you think it is? And I'm even thinking, specifically about here in Birmingham within the investment community.
Yeah, I follow the economics quite closely, not just here, but around the country. And my belief with a lot of financial people and experts and online and in the news is that, the market was going to really take a dive, and it was the complete opposite. and
Yep.
it went into overdrive. And so, yeah, I think as a result, everyone thought the pandemic would really slow things down, and it didn't, because, people didn't want to move. They didn't want to give access to their property, in order to sell the property. They were afraid of catching COVID. And I think as a result, people decided, well, I'm going to stay put, and I'm just going to expand. I'm going to improve my property. I'm going to stay here. I'm not planning on moving in when I thought I was going to move. So I think there were a tremendous amount of factors. Those are a couple things that I think caused people to kind of stay put and decide not to make that move. And when it comes to the rental side, a lot of our tenants who, very few of them, if ever, move, and the ones who decided they were thinking about moving, when they went out and tried to find another place, there was nothing available, which was, I think, in a good way, good for us that, we've got tenants, because we don't like vacancies, we don't like the turnover. And I think it really was advantageous to us to, when this thing happened, that, we were fortunate enough that none of our tenants moved, and everyone was still paying rent, because the majority of our properties are Section 8, and none of our tenants who paid a portion of the rent tried to take advantage of that. Everyone's paying rent. We have no arrears, and we have about 100% of success in terms of our tenants paying rent on a monthly basis.
Yeah, we were, I think we were modeling out probably about the time we did our interview in April, March and April and May, we were modeling out, okay, what happens if 50% of our portfolio stops paying rent? Like, we were having to do these projections, like, what is the worst case scenario? Because nobody knew how bad it was going to get. And at that time we were probably managing 3,000 properties or something like that. And now it's 6,000, but we were pleasantly surprised to have residents continue to pay. Like, we may have experienced a little bit of delinquency based on some COVID stuff, but not a whole bunch. I mean, it's still remained strong. I think probably for the same reasons you're talking about, because people stayed put. The inventory was lower, the demand was still high, and prices shot up. And man, when people wanted to stay put and just improve their dwelling place.
I absolutely agree. And I firmly believe that, I think just human nature is people decided they were going to, kind of stay home and kind of get through this in their own way. And I think now that things are opening back up, people are trying to figure out, well, how do we live with this thing? But going back to when it first happened, Jeff and I sat down and we ran out projections, and I would say 95, 96% of our rentals are Section 8 occupied. We have a handful, I can count on one hand, who are private pay tenants, meaning they pay the rent. It's not subsidized. And we determined that if all of our Section 8 tenants, including our private pay, stop paying their portion of the rent, we can still meet our debt obligation. And that was very important, because we were a little bit nervous that, are we going to have an issue here? And unfortunately, we did our modeling as well, just like you did, and determined that we'll be fine. We'll be able to meet our financial obligations to our lenders, to our banks, even if these tenants stop paying. And that, to me, was the strength of why we really like Section 8 here in Birmingham. Doesn't always work in other markets, but the Section 8 program here in Birmingham works for us particularly well.
Yeah, and we talked about that on the last episode. I remember just, how much you all love Section 8. I remember that whenever we would get properties from you, when you've sold them to an investor and they chose us as a property manager, the packet that you would give us, all the Section 8 paperwork, it's like beautiful. Like, I've never seen anybody deliver that type of detail and paperwork, which makes everybody's job a lot easier. And really, your whole thing is you're doing it for, it's a service for your customer, your client. You want them to have a great experience. And part of that is the transition off to a property manager.
Right. I think, for us, it's pride as well. It's taking pleasure in, helping a new investor get established in our market, have a footprint, and buy their first investment property and keep it long term. Of course, what's happened now, a lot of the turnkey properties we sold 3, 4, 5 years ago, I'm starting to see crop up for sale off the MLS, and they'll make a nice profit on those properties when we sold them 3 to 5 years ago. But some of them are deciding that the market's really strong and they want to sell. I advocate, unless you're going to take those funds and you're going to recapitalize either in this market or somewhere else, and you need to have a strategy what you're going to do with those funds. Otherwise, the funds are going to sit in your bank account and you're going to lose to inflation, and you're not capitalizing, you're not redeploying those funds elsewhere. It doesn't make sense to sell, but some figure that now's the time to sell, and that's great, but they need to have a plan on what they're going to do with those proceeds.
Yeah, that's really interesting. Because and you and I were talking before we hit record just about exit strategies, and you can't always count on a bull market to take you to your final exit strategy. So what do you think? One thing that I notice from investors when they buy properties, they choose a market like Birmingham or some other market, and they say, hey, I'm going to buy a bunch of rental houses there. I think the mentality going in, and it was mine when I first started buying properties in 2003 and 4, hey, I'm going to buy these, I'm going to own them forever. And that typically, it may work out in some cases, but sometimes it doesn't. So how important do you think it is for investors to think through their exit strategy on the buy side of getting into these properties? And like, what does that look like? Do you help coach people through that process?
Boy, where to start? It all depends on how they make their entry point. If they're looking to buy themselves and fix it and then hold it, there's so much content we can go through to kind of go through each point and help them understand, where the numbers need to lie or land. Yeah. If they're buying a turnkey property, as well as, I always tell them that, if you're buying a turnkey property from us, we're delivering a fully renovated, maintenance-free property. You're buying at appraised value, at full market value. Right. If the market continues going up, you want to continue to hold this for 3 to 5 to 10 years. This is legacy building. It's for your family, for kids, it's for your retirement. So unless you need the funds to deploy elsewhere and sell the property, what's the point of selling them? Right now we're in the middle of refinancing a 26 property portfolio. We're closing on it this week. We're pulling out probably about $300,000 of capital at 75% LTV. And we are going to redeploy that capital in so many different ways for us. And so we have plans for it. So we know what we're doing going into it. So if they're looking to buy a turnkey property, and then eventually, if they're going to hold it for 3 to 5 years and then sell it, know what you're going to do with those funds. But I advocate when they're buying a turnkey property, especially if you're new to this market or new to buying and holding turnkey properties, is you need to think strategically. Don't think tactically. This is a long-term play. This is for us. I just turned 58 and I plan on holding these properties for probably another 15, 20 years. I have no reason to sell. Yes, could I, have a 7-figure payday by selling my entire portfolio? Great. What am I going to do with those funds? Then what? All my passive income disappears. Where am I going to deploy that capital? And then I've got a huge tax bill. So I advocate for a turnkey buyer. Make sure that if you are going to buy that property, that you're going to hold it. Think about retirement. This is your passive income for life. You don't really need to sell those properties. However, some people do. Now, talking about the other side, I have a lot of investors come to me and they want to buy a property off the MLS. They want us to renovate it and they want us to put tenants into them. And they feel that they can get a lower price point to entry and then turn around and rent it and get this, be into the property for less than what they would pay for a fully turnkey property buy from us at appraised value, at a higher rent than, actually what they think they can get doing it on their own. So the point here is if they pick up a property for, let's say, $20,000, which you can still get here in some areas of Birmingham, and you put $20,000 into it and you get a tenant paying $700 a month, you're into for maybe $45,000, $700 a month. You got a great cash flowing property, great cap rate. But now what's the plan for that property? More than likely they've paid all cash Now they need to be able to refi out and take that capital out and then redeploy it into other projects. So by the time they're done with that property, there's two things that's going to happen. When they go to refi, they're not going to understand the lender's minimum requirements in terms of value and rental amount. And then therefore they're going to tie up their capital because they can't get that property refinanced. Yep. So that's one example. Another example is if they buy a property, let's say for $50,000, and they think it's a great deal, they know I can get it rented for them for $1,000, and they put $25,000, $30,000 into that property, they're in for $85,000, $90,000. By the time they're done, they're pushing $100,000 all into that property. I put a 10 in there for $1,000. They've done all that work, all that heavy lifting. It's taken 6 months of holding, renovating from remotely. Hopefully we're with the contractor who's going to do right by them and not take advantage. And then into the property for about the same amount of money, same cap rate, and same return, had they bought a fully turnkey maintenance-free property at appraised value from REI Trader. It's 1/2 dozen of the other. I would say when you're looking at your returns, whenever we are buying a property, and I'll give you a couple examples, is that if you're looking to fix and flip or buy and hold on your own and run it through your own system, make sure you have multiple exit strategies. And I'll give you an example. Recently, we had 3 projects where we ran over on renovation costs, and then we decided we can't keep them in our inventory. It doesn't meet our minimum cap rate, which for us is around 9%, 9.2%. It's usually where we like to get on a cap rate. So we decided, let's just sell them retail. And before I put them on the MLS, I sent them over to OfferPad. And OfferPad came along and they offered us a lot more than I think we were going to get putting it out on the MLS. Plus, we didn't have to deal with seller concessions for first-time home buyers. And even though we paid them 5%, we still came out well ahead of what our projections would be. And our profit projections was 43% higher selling to OfferPad than how we sold on our own off the MLS. Those properties were a result of just going over on a renovation cost, and we decided we couldn't hit our numbers as rentals. Right. So it's time for us to sell those properties, and we did that. We had another property.
Well, hold on real quick, Jonathan. Explain what I wrote OfferPad down because I don't know what OfferPad is. So explain to those people who aren't as savvy like me what OfferPad is. It's really interesting. Sounds like.
Yeah. OfferPad is an iBuyer. It's gotcha. There's several of them out there, like Zillow, which of course has exited the market. Right. They're national. They're all over the country. They do have people on the ground in each of these markets. You can go to the website, submit it. They literally will give you an offer on a property. They run their algorithm and they will give you an offer, email it back to you. And then they will come out, they will do their inspections, and you sign the contract. Then you typically will close in 30 days. And they'll charge 5%. So for us, even though I'm a licensed real estate broker, it was better to give up 5% with a cash offer at a much higher price than what I thought we can get for the property, right, than sell it to a retail owner occupant where they were going for financing, subject to appraisal, subject to inspection, and asking for seller concessions because typically our properties are sub 150,000. And they're always going to request, contributions towards closing costs, even though this is a strong market. They need that in certain areas of Birmingham. And so for us, it was very fortuitous and advantageous for us to sell through an iBuyer platform. And so that's what we've done.
Gotcha.
So having that as a potential exit is new for us. One other avenue is short-term rentals, Airbnb, VRBO, Booking.com. We had one property in Southeast Lake. We bought it for $10,000 about a year ago from a wholesaler, and we put probably about 115 into it. Couldn't sell it retail, a little bit of smaller house, and now we're getting ready to put it on Airbnb and the rest of the short-term rental websites. And instead of projecting around $1,100 a month with a long-term tenant, we should be profiting about $25,000 to $3,000 a month as a short-term rental. So looking at your exit strategies from the standpoint of if you meet your returns on a fix and flip versus a buy and hold versus a short-term rental, or selling to an iBuyer, you want to make sure anytime you go into buying a property with us, we have at least two minimum, preferably three exit strategies, because if your primary exit strategy does not come to fruition and you go over on your numbers, you need to then fall back on your second exit strategy. And so many people here, or in multiple markets, they just don't do that. And then they end up selling the property at a loss. You have to think of, if there's a way that, if you feel that you've got a property where you can't sell, and you've got a note you got to pay off with a hard money lender, can you refinance that property as a short-term rental like an Airbnb and still come in with a nice return, take out some cash on a refi, get most of your capital back, and then keep as a long-term investment? So with short-term rentals, with Airbnb, with the iBuyers, it's opened up new avenues for us to explore when we incorporate them into our exit strategies.
So let me ask you a question, because you raise a great point, and I've heard from other local investors that I've been talking to about short-term rental in areas that I never would have ever thought, hey, this is going to be a short-term rental place. So tell me what you're seeing in the market, and if the profits are that much, why wouldn't more and more and more people look at doing short-term rental as opposed to long-term rental in some of these areas?
I think Birmingham traditionally hasn't been really a strong market for Airbnbs. I think it's only happened in probably the last 2 years. I mean, I had a couple of friends who had a few downtown and they were doing well, and I just didn't see the value outside of downtown where there was an opportunity to do this. As you know, and we'll talk about it, we are money brokers as well. And a few months back, I was talking to one individual. I was doing a refinance for him, and he had a couple of Airbnbs in some of the low income D-class neighborhoods. And he was profiting about $4,000 a month. And it just blew my mind. And then I started to do some more research and determined that, now Birmingham, with all the great things that are going on here, with Protective Stadium, on new football stadium, there's a boom going on downtown. Now we have the football league that is coming to town this summer. Then we've got the 2022 World Games. There's, I think, a real demand now for the short-term rental market here in Birmingham. But, a year or 2 years ago, 1 or 2 years ago, I didn't see that, but now I see that. And I think people need to look. I think it really comes down to their numbers. When you look at your returns, you have to understand when you have all your numbers together on your acquisitions, renovation, holding costs, then you could really dive deep into numbers and figure out, if I sell this as a fix and flip, will I be able to hit my minimum returns of what I expect, my minimum profit? For us, I can't touch anything unless we can make at least $25,000 profit. That doesn't mean there's an investor who's more aggressive, who's younger, who does less inventory than what we do, is happy with their $10,000 or $15,000 profit on that property. Those numbers work. So you really have to understand on your exit, what's your minimum profit potential on your fix and flip going to be. On your rental, it really comes down to, if you're looking to hold that property and you go over, and then you have the option of, do I just fix and flip that, or do I break even, take my funds, lessons learned, and redeploy into a new project? Or now with the short-term rental market like Airbnb and VRBO, can I keep this property? Can I make those numbers work? And so we found that, doing our due diligence, that going from a $1,100 to $1,200 to $1,300 a month rental, and understanding that for us, 15-day of occupancy on a monthly basis at $150 on average, using our analysis tools for our short-term rentals, that, we could profit about, $2,200, $2,300 to $2,500 a month. And if we could at least double what I'll anticipate our projected monthly long-term rental income would be, it made sense for us to keep it as a short-term rental.
Yeah, I think that's great. I mean, I think it was Bruce Glenn who was telling me about some Airbnbs, and I think he's doing a few as well. This is really, what I just want to step back a little bit from this interview. What I think is really, really important for people to understand, if you're listening to this, I think it goes back to, Jonathan, what you said at the very beginning, which is treating this like a business. So, Jonathan's been doing this a long time. He's very, very serious about it. He does it full time. But even if you're doing it part time from out of state, you need to treat it like a business, and that includes. On our last podcast episode, you talked a lot about setting goals. So investors setting goals, what they want to accomplish, what they want to achieve. You talk about exit strategies. You talk about minimum return on investment that you and Jeff have set. Like, this is what we're going to, we won't do anything less than this. I mean, do you understand? What I want people to hear is just like how much thought and intentionality goes into this, because I see a lot of investors who just kind of come in here and fling some money around, and it doesn't work like that. There are multiple things you need to be thinking about, and be careful, because you can get burned buying even $10,000 rental houses or $20,000 rental houses, which, anyway, so just a thought there, Jonathan. This is great. Why don't we kind of switch gears a little bit? I'd love to hear about your, multi-unit that you're developing in Center Point. Because I remember last time you were on as a guest, you were talking about, hey, we started this, but I think I think y'all put it on hold for a little bit until you figured out what was going to go on. But love to hear where you are with this and how it kind of plays into your long-term goals.
Sure. Previously, our preference was always single family rentals. And, to get to that 200 door minimum for us to say, okay, we've achieved our goals, we can step back and we can do other things. In the last year, again, it's understanding that you look for nuggets of opportunity, you look to diversify, you look to don't become complacent and figure that, this is my only exit strategy. I just want to be a wholesaler, or I just want to be a fix and flipper, because if the market shifts and turns, then that strategy may not work. And so you need to look differently at the market as a whole, and understand that there are multiple ways to have opportunities or generate income, in this market. So for the multifamily, we've recently looked at in the last year. And so we, last summer, we went to contract on a 24 door multifamily property in Center Point, Alabama, which is just north of downtown, about maybe 15, 20 minutes. And we saw the value in, adding more doors and still getting roughly the same rent as we would with some of our single family rentals, and getting as close or exceeding that 200 door minimum that is our target. So we bought this property, I think it was late summer of last year. And it's not a typical transaction where we can just come to the table with cash. We have a longstanding relationship with a few community banks here, and they stepped up and they were able to provide the funding. Anyway, we bought it for $450,000. We're putting about $600,000 into it. We'll be all in about 1.1. It will appraise for about 1.8, stabilize according to the appraiser when he did the appraisal in this initially. It's going to rent for about $800 per door. And what was really exciting about this property is we're probably about a 9.7, 9.8 cap rate after all expenses on this. So we're really excited about that. And number two, that on the property, we have the ability to build, to add more units to the property. There's a 16-plex unit, and there's 2 4-plexes. The 4-plexes, we're almost done renovating those, and we're moving over to the 16-plex, probably I'd say within the next 4 weeks. But right across from the 16-plex back in the 80s, there was another 16-plex on that property that was demolished. And of course, now without rezoning, without going before the board, anything like that with the city to get, an ordinance, it's already zoned on that property for, to build another 16-plex on the property. So a 24-door unit is going to add another 16 units probably in the next 12 to 18 months. And there's also room to build another 4-plex on the property. So we're going from 24 to 40 units probably within 2 years. So we're really excited about this project. We're probably about, I'd say 40% completed. Our goal is to get the 4-plexes up and completed and occupied, either with long-term tenants or with short-term rental tenants like Airbnb, in time for the World Games coming in June of this year.
Wow, that's great. I mean, that's like the best of both worlds. You have a property that you can already rehab and get some money coming in. Then you have option to build to rent, like on the same property, which is fantastic.
I think the challenge, Spencer, is that, what will the renovation look like when we have some long-term tenants move in and we're still renovating, the bigger property, 16-unit building, and how it's going to impact, them living on the property during those renovations. Also, we're weighing that versus just making them all short-term rentals during the World Games. And then after being over into putting long-term tenants in there. So we have a lot of opportunities with this particular development.
Yeah, that's exciting. That's next level. I think that's great to hear, Jonathan. And not only that, but you're adding a ton of value to the community out there in Center Point. So instead of having just demolished and bulldozed units, you're going to add more housing, more quality housing in the area. That's awesome. So let's jump to something that's really intrigued me, that you mentioned. You have REI. You've now switched to the money side of this business. So why don't you tell us a little bit about the decision behind that? Like, how did that come about, and what does that look like, and what does it mean to investors?
I'm really big on diversification. As I said earlier in a previous podcast, it's all about having multiple streams of income. You want to be able to hedge against any market fluctuations. The Fed just recently are in the process of raising interest rates. And so a lot of the lenders are doing so as well. And about a year ago, I had a lot of investors come to me and they needed funding for their fix and flips, or they are asking, who I could refer to them to refi their properties or portfolio. And so the idea came to me, and Jeff and I sat down, my business partner, and we said, there's a way that we can help investors, not just here locally, but around the country, provide consulting services to get them funded on their projects. And so reached out to a bunch of lenders and found out that they have broker programs available to select few. You have to obviously qualify, and you have to know what you're doing, where you can broker deals for them as a commercial lender. Obviously, having a mortgage broker's license is not required because these are non-owner occupied properties, and you're taking them, you're deeding them into an LOC, and it's commercial lending. So there's a couple of advantages there. First, we find out that a lot of investors who, I've been doing this in 20 years now, who don't have the expertise in navigating, working with lenders. A lot of the lenders they talk to, they've never owned a piece of property. They don't speak the language. We speak the language. We always position it first as, we are investors first, we're brokers second. So any property that, someone comes to me with, I'm putting my investor hat on. I'm trying to understand from that standpoint, what exactly are you trying to accomplish here? What's your exit strategy? What's your returns? What kind of cap rate are you looking for? And then I model that based on, what kind of LTV that, you should be looking at achieving, what kind of cash flow, what kind of cap rate and returns on your potential refi, or even if it's a bridge loan for a fix and flip. So, providing those consulting services where we speak the language was very important. And then second, we have these very long-standing relationship with a lot of these lenders. And so we decided to leverage our relationship to bring a lot of investors into the fold who need that funding, where we can kind of guide them through the process, which leads to number three, that we walk hand in hand through the entire process from start to finish, from the time you accept a term sheet to the time you close. Right now, we are doing either acquisition or refi on 207 properties, whether single family and multifamily, in excess of about $15 million in loans that all are closing probably before the end of March. And so that is just first quarter. So we found that there's a real value in offering those services. Second, we are in development of setting up a private fund. And this is going to really be for local investors, people that we know who need fix and flip funding or short-term bridge funding for a one-year note while they stabilize a rental property before they go for long-term 30-year fixed refi financing. And so we are looking to building that fund out and hopefully launching it. I hope by the end of first quarter to make those funds available to local investors.
Wow, that's exciting. That's great. So when did you guys kick this off? Just like a year ago?
Yeah, we started in May of last year. We did our first loan. We did a portfolio of, I think it was 19 properties here. That was our very first loan. And, we kind of started off slow. We needed to make sure that we worked out all the kinks in the process. And typically, whenever we work with any of these lenders, we like to be the guinea pig. We like to run one of our portfolios or refi or a bridge loan. Not that we need the phones, but we still like to run it through them. So, we understand what the process is. And, we started last May, and we've refinanced several of our portfolios. We did some bridge funding with these lenders, understand the process. And then I think it was probably around June, July when it really started to take off. And I think to date, we've probably, in the last year, we've probably done maybe north of 40 million in loans since May of last year. So coming up on 1 year, we're on track to probably, I like to get to 50 million by May of this year. So we'll see if that happens.
Well, I'll tell you, there's one thing that we hear from investors all the time. It's A, finding properties, B, financing properties. So I think you've got plenty of people out there that need those services.
I will say this, that we talked about exit strategies before, especially if you're buying and holding. I always tell investors, they call me and they're looking to refi a property, or they're looking to employ the BRRRR model. BRRRR model, for a lot of you who don't know this, is you're going to buy, you're going to renovate, you're going to rent, you're going to refinance and then repeat. That is the BRRRR model. They really need to understand, if they're going to employ that model, use a bridge loan first, and then they're going to renovate, stabilize a property, refinance into 30-year fixed, which of course I always recommend. You want to make sure you understand the lender's minimum requirements. If you don't, you won't be able to refinance. You're going to tie up capital on that property. And so, for example, most of our lenders require a minimum of $75,000 value with minimum $700 to $750 a month rent. With multifamily, it's different. It could be $50,000 per door with 600 plus rent. So the point is, I don't want to throw out a lot of numbers and get stuck in the weeds with the financing. Just make sure whatever model you're employing, if you're using hard money, if you're going to be refinancing, understand what the minimum lender requirements are, so you can get those funds back out, cash out, and redeploy in a new project.
Yeah, you don't want to get stuck on a BRRRR project just doing 2 of the R's, and you can't refinance and repeat. You get stuck just with renovating and renting, if that's your strategy. So,
and that happens a lot. I think that, someone who comes to me and say, hey, I'm into this property for 40,000, I'm getting, $650 a month rent. I've got a 13.5% cap rate. It's great. I want to refinance it now. And then to find out that the ARV after repair value is only 55,000, and they don't meet the lender's minimum requirements on the value, and they don't meet it on the minimum rents. And now they're stuck on a property that they can't refinance. And so I do have a couple programs that will handle that type of asset, but you have to refinance a minimum of 3 properties with values of 50K ARV or greater, but not for a single family asset. So they really need to understand the lender's requirements. I'm always happy to have those conversations with people. So when they're going out there and they're looking for properties, they know they can come to me on either the acquisition or refi, and they know they can get those funds back out, keep it as a rental, redeploy that capital in future projects, and it's just wash, rinse, and repeat.
Yeah, that's great. I think this is great. Jonathan, one of the reasons we love having you on is just because you're a wealth of information. Not only that, just sharing some information that's really going to help people, but also you have the ability to help investors who are always looking looking to get into Birmingham real estate. So we really do appreciate it. So as we wrap up, Jonathan, what do you see kind of in the future for Birmingham real estate? If you were looking in your crystal ball, what are your thoughts?
Well, Birmingham to me has always been more of a buy and hold market, and I think that will continue to grow. I think rents are at an all-time high. I think they'll stabilize. I don't think they're really going to decrease even if the market takes a turn. When I first moved to Birmingham in 2011, the landscape is completely different than back then. Birmingham to me is one of the top markets in the country for investing because the cost of living is extremely affordable here. We have the second lowest property taxes in the country. So just across the board, affordability factor is just very attractive for a lot of out-of-state investors, especially from New York and the West Coast. Also, a lot of the great things happening. I mentioned the World Games. We've got the Florida League, Football League that is coming to town. I think that's going to add a lot of value to Birmingham's footprint. And then recently, a few months ago, Condé Nast Traveler, the most prestigious travel magazine in the country, actually listed their top destinations in the world for visiting. And Birmingham was at the top of that list because of everything that's going on here. So, you think about, wow, where Birmingham is the best kept secret. I moved here because I saw an opportunity. I lived in South Florida. I had the house on the beach. It was great. I decided there was an opportunity here, and I moved to Alabama not knowing anyone. But I knew that there was a good opportunity here. And now I continue to see the growth here in Birmingham to be tremendous on the investing side. And I think there's a lot of great things that is going for Birmingham, and it will continue.
Yeah, no, I think that's great. You're right. Back 2010, 11, this place looked totally different. The city's done a great job of revitalizing. There's so many good things happening in Birmingham. The secret really is getting out. We like to think it's a really good kept secret, but it's obviously gotten out to a lot of folks, and which is great because Birmingham is a fantastic city. And I'll say this, even back then, Jonathan, thinking back to 2011 and when you were first coming in, it was kind of, as we saw a lot of out-of-state investment, it was kind of like the wild, wild west around here in Birmingham. And it was the wild, wild west, which meant buyer beware. And so, but what's great about you, Jeff, your team at REI Trader is y'all, because you operate your business with integrity and really help people, you've got long-term repeat customers and you stick around. I mean, that's how you build a great business. So congrats on that. Well done.
Yes, thank you. I want to say that, I'm at the point after, this May will be 20 years that I've been doing this, and you reflect and you think back, and I've done north of 2,000 projects. And I'm at the point now where I feel like I want to give back and make an impact on other investors, because I've been there, done that. I've been in their shoes. I walk in their shoes every day, and there's so many mistakes people can make, and I'm happy to kind of consult and help young investors, new investors, kind of not just be in this market, but other markets as well. So being on your podcast has been really advantageous for us. I mean, I'm super happy with everything that you and the Evernest team are doing. I'm very thankful. I will say that obviously my shameless plug is that, if you need to reach out to me, reitrader.com If you're looking for funding on your fix and flips or multifamily or single family, whether it's buy and hold or refi, it's reibrokers.com. We also have our brokerage, Real Equity, which is, Real Equity Realty.com, and also construction services, Bill Pro Construction. That's Jeff's company. He handles that side of it. So we offer full complement of services here in the Birmingham area.
Well, good. I wasn't gonna end this podcast without giving you the opportunity to share all of that information, because I do agree. I mean, this is what the podcast is about. It's not about Evernest or anything else. It's just about, hey, how can we help and educate other investors to make great decisions and succeed in this Birmingham market? So great job. All right, Jonathan, thank you so much for being with us. Everybody, Jonathan mentioned this BRRRR strategy on our other podcast, the Evernest Real Estate Investor. We just launched a new episode where we bought a Jackson, Mississippi house. No, it's not Birmingham, but you can walk through that whole strategy with us. We go through our numbers and everything. So check that out if you want to. And we'll be back again with another episode of the Birmingham Real Estate Investor podcast. Thanks, everybody.